Based on the provided data, the trend for Bitcoin appears to be slightly bearish. While there are periods of upward movement, the price consistently finds resistance near $93,900 and tends to pull back. The RSI indicates that the asset is currently not oversold, but it has been hovering near oversold levels recently. The Bollinger Band suggests potential volatility with the price currently trading near the lower band. Considering these factors, a potential strategy would be to wait for a dip below the support level of $86,100, with a stop-loss order placed at $85,600. The target price could be set at $83,500, where the lower Bollinger Band intersects with a previous support level. This strategy aims to capitalize on a potential short-term decline while mitigating risk by setting a tight stop-loss. Based on the provided data, Bitcoin Cash appears to be in an upward trend. Historical prices show a general increase, with the forecast data predicting further growth. Support levels around $320 provide a solid foundation, while resistance at $421 suggests potential for upward movement. Given this trend, a long position is recommended. A suitable entry price would be around $365, which is above the recent support level and close to the predicted price for March 8. The stop-loss order should be placed at $320, protecting against a significant reversal. The target price could be set at $420, aligning with the predicted high for March 14 and representing a substantial profit potential. Based on the provided data, STRK appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with support holding around $0.703. The forecast data suggests this downtrend may continue in the coming week. Considering these factors, a bearish strategy could be implemented. A potential entry point would be at $0.725, the current day's low. A stop-loss order should be placed at $0.736, slightly above the current price, to limit potential losses. The target price could be set at $0.659, based on the forecast data and the ongoing downtrend. This strategy leverages the anticipated price decline and aims to capitalize on the potential for further downside movement. Based on the provided data, Ethereum appears to be in a downtrend. The historical price data shows a consistent decline, with the price closing below the previous day's close for most of the period. The forecast data also suggests a continued downward movement. The RSI indicator, hovering below $50, supports this bearish sentiment. Considering these factors, a short position is recommended. A suitable entry price would be around $2,170, the recent high point in the forecast data. The stop-loss order should be placed above the recent swing high at $2,220, limiting potential losses. The target price could be set at $1,940, based on the forecast data and the support level identified at $2,080. While the RSI and trend analysis suggest a short position, the Bollinger Bands offer a slightly different perspective. The price has been consistently touching the lower band, indicating potential oversold conditions. However, the recent price action suggests a potential breakout below the lower band, further reinforcing the bearish outlook. Therefore, the short position strategy based on the trend and RSI analysis is prioritized, with a stop-loss placed to manage risk associated with a potential bounce off the lower Bollinger Band. Based on the provided data, XRP shows a volatile price trend with a potential for upward movement. The historical data suggests a support level around $2.32, while the resistance level is around $2.87. The forecast prices for the next week indicate a slight downward trend initially, followed by a possible recovery. Considering these factors, a long position can be initiated when the price rebounds from the support level and crosses above the $2.50 mark. The entry price for this long position should be around $2.52. A stop-loss order can be placed at $2.35 to limit potential losses. The target price can be set at $2.80, aiming for a potential profit of approximately $11%. This strategy combines the upward trend potential with the support level bounce and utilizes RSI and Bollinger Bands to confirm entry and exit points. Based on the provided data, Binance Coin appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below the support level of $587 on several occasions. The forecast data also suggests a continuation of this downtrend, with prices projected to remain below $600 for the next week. Therefore, a short position strategy is recommended. Enter a short position at the market price around $595. Set a stop-loss order at $605 to limit potential losses. The target price for this trade is $575, based on the support level and the projected downtrend. This strategy utilizes the downward price momentum and aims to capitalize on the anticipated continuation of the downtrend. Based on the provided data, Stellar appears to be in a short-term downtrend. The price has been declining steadily over the past 2 weeks, and the forecast data suggests that this trend may continue. The RSI indicator is currently at $39.90, which is within the neutral range, but the downward trend in price suggests that a bearish continuation is possible. Considering the RSI, a potential entry point could be around $0.283, the recent support level, with a stop-loss set at $0.272, just below the next support level. The target price could be set at $0.269, based on the lower Bollinger Band and the projected downward movement. This strategy utilizes the support level as a potential entry point and the RSI to gauge potential oversold conditions. The stop-loss protects against further downward movement, while the target price aims to capitalize on the anticipated downtrend. Based on the provided data, Toncoin appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue in the coming week. The RSI indicator, while not oversold, is hovering around neutral levels, indicating a lack of strong buying pressure. The Bollinger Bands are contracting, suggesting a potential for a breakout in either direction. A potential strategy could involve a short position. Enter a short position at the market price on March 8, $2,025. Set a stop-loss order at $3.10, slightly above the predicted low for the week. The target price would be $2.75, aiming for a potential downside of approximately $11%. This strategy leverages the perceived downtrend and the potential for a break below the current support levels. It's important to note that this is a speculative strategy and carries inherent risks. Based on the provided data, Cardano appears to be in an upward trend. The historical price data shows a consistent rise, with a notable jump on March 08th. The forecast data also predicts continued upward movement. Considering the support and resistance levels, the price is currently trading above the support level of $0.803, indicating a bullish sentiment. A potential entry strategy could be to buy Cardano at the current market price, with a stop-loss order placed at $0.795 and a target price set at 95 cents. This strategy leverages the upward trend and the support level, aiming to capitalize on further price appreciation. The RSI indicator suggests that the asset is not currently overbought, further supporting the bullish outlook. The Bollinger Bands also indicate potential for upward movement as the price is currently trading near the lower band. Based on the provided data, Litecoin appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with prices struggling to break above the resistance level of $114. The forecast data also suggests a continuation of this downtrend, with prices predicted to fall below $110 in the coming week. Considering these factors, a suitable strategy would be to initiate a short position when the price reaches $110. The stop-loss order should be placed at $114 to limit potential losses, while the target price could be set at $103, representing a significant support level. This strategy leverages the identified downtrend and utilizes technical indicators to define entry and exit points. Based on the provided data, SWACoin appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $2.52 on several occasions. The forecast data also suggests a continuation of this downtrend, with prices projected to remain below the recent support level. Considering this, a bearish strategy is recommended. A suitable entry point would be at the current price of $2.52. The stop-loss order should be placed above the recent high of $2.79, acting as a safeguard against an unexpected upward move. The target price could be set at the projected low of $2.49, aiming for a potential profit of approximately 2%. This strategy leverages the downtrend and utilizes the support and resistance levels to define entry and exit points. Based on the provided historical and forecast data, Aptos appears to be in a sideways trend with a slight upward bias. The price has been oscillating between the support level of $5.81 and the resistance level of $6.17. RSI suggests the market is not overbought or oversold, currently hovering around $49. Bollinger Bands indicate a tightening range, suggesting potential for a breakout in either direction. A conservative strategy would be to wait for a clear breakout above the resistance level of $6.17 with confirmation from RSI moving above $60. Entry price would be set at the breakout point, stop loss at the previous swing low, around $5.81, and target price at the next resistance level, around $6.45. Alternatively, if the price decisively breaks below the support level of $5.81 with RSI falling below $30, a short position could be taken with an entry price at the breakdown point, stop loss at the previous swing high, around $6.17, and target price at the next support level, around $5.50. Based on the provided historical and forecast data, SE appears to be in a downtrend. The price has been consistently declining over the past 2 weeks and the forecast suggests further downward movement. The support price of $0.223 is acting as a temporary floor, but the RSI is hovering in oversold territory, indicating potential for a short-term bounce. Therefore, a cautious long position could be considered. A buy order could be placed at the support price of $0.223. The stop-loss order should be placed below the recent lows at $0.220 to limit potential losses. The initial target price could be set at the 50-day moving average, which is currently around $0.235. This strategy leverages the potential for a short-term bounce while managing risk. Based on the provided data, Ethereum Classic appears to be in a sideways trend with slight downward pressure. The historical price data shows fluctuations within a range, with support around $20.20 and resistance at $20.80. The RSI oscillates between $34.60 and $49.90, suggesting neither extreme overbought nor oversold conditions. The Bollinger Bands indicate a narrowing range, suggesting a potential for a breakout in either direction. Considering these factors, a conservative strategy could involve waiting for a clear breakout above the resistance level of $20.80. Entry could be triggered at $20.90 with a stop-loss placed at $20.60 to manage risk. A potential target price could be set at $21.50, aiming for a 3% return. Alternatively, if the price breaks below the support level of $20.20, a short position could be considered with an entry price at $20.10, a stop-loss at $20.40, and a target price at $19.70. This strategy would aim for a 2% return. Monitoring the RSI and Bollinger Bands for further confirmation and adjustments would be crucial for optimizing this position. Based on the provided historical and forecast data, Polygon appears to be in a downtrend. The price has been consistently decreasing over the past 2 weeks and the forecast predicts further decline in the coming week. Considering this, a short position could be considered. A suitable entry price would be around $0.250, with a stop-loss placed at $0.258 to limit potential losses. The target price could be set at $0.230, aiming to capitalize on the predicted downward movement. In addition to the trend analysis, the RSI indicator can also provide insights. When the RSI dips below $20, it signals an oversold condition, which could present a buying opportunity. However, in this case, the RSI has been fluctuating within a range and hasn't reached the oversold level. The Bollinger Bands, which measure volatility, show that the price is trading near the lower band, suggesting a potential for further downward movement. Therefore, the trend-based strategy with a short position seems more compelling based on the available information. Based on the provided data, AEVO appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data projects further price drops. Considering this trend, a bearish strategy could be implemented. A potential entry point would be around $0.133, the forecast price for March 8. A stop-loss order should be placed at $0.137, slightly above the entry price to limit potential losses. The target price could be set at $0.118, the forecast price for March 10, aiming for a $12% return. The RSI indicator currently sits around $37.30, suggesting the asset is not oversold. However, it has been hovering in the lower range for several days, indicating potential for further downward movement. The Bollinger Bands are also constricting, suggesting a potential for a breakout in either direction. Given the overall bearish trend, a breakout below the lower Bollinger Band would further strengthen the case for selling. It's important to note that this is just a suggestion, and traders should always conduct their own research and risk management before making any investment decisions. Based on the provided historical and forecast data, optimism appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with support holding around $0.941. The forecast for the next week indicates a continuation of this downtrend. Therefore, a short position is recommended. Enter a short position at $0.967, the first forecast price. Set a stop-loss order at $0.989, the high of the forecast week, to limit potential losses. The target price for this trade is $0.916, the lowest forecast price, aiming for a profit of approximately 5.3%. The analysis of STRK data suggests a potential downtrend in the coming week. Historical price action shows a consistent decline after reaching a peak on February 22. The forecast data further supports this bearish outlook with predicted prices consistently below the previous week's closing price. The RSI indicator, while currently hovering around $35, has been trending downwards, indicating weakening bullish momentum. Considering these factors, a short position could be initiated. A suitable entry price would be around $0.184, the predicted price for March 8. The stop-loss order should be placed above the recent support level at $0.181 to minimize potential losses. The target price could be set at $0.165, based on the predicted price for March 12, representing a potential profit of approximately 10%. This strategy leverages the downtrend identified through historical and forecast data, supported by the weakening RSI and potential price break below the support level. Based on the provided data, Solana appears to be in a downtrend. The historical price data shows a consistent decline, with the price dropping below the support level of $131 several times. The forecast data also indicates a continuation of this downtrend, with prices expected to remain below the resistance level of $147. The RSI is consistently below $50, indicating bearish sentiment, and the price is trading below the center of the Bollinger Bands, suggesting a potential for further downside movement. Therefore, a short position strategy is recommended. Enter a short position at the market price, with a stop-loss order placed at $147, the resistance level. The target price is $125, based on the forecast data and the historical price action. This strategy aims to capitalize on the ongoing downtrend in Solana. It is important to note that this is a high-risk strategy and should only be implemented with a portion of your capital that you are willing to lose. Based on the provided data, Jupiter appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The RSI is currently below $50, indicating bearish sentiment. The Bollinger Bands are also contracting, suggesting a potential for a break downwards. Therefore, a short position is recommended. Enter a short position at $0.648, the first forecast price. Set a stop-loss order at $0.689, the historical resistance level, and a target price at 52 cents, the lowest forecast price. This strategy utilizes the downtrend, RSI, and Bollinger Bands to identify a potentially profitable short opportunity. Remember to manage risk carefully and adjust the strategy as market conditions evolve. Based on the provided data, Render appears to be in a downtrend. The historical price data shows a consistent decline, with the price breaking below the support level of $3.53 on several occasions. The forecast data also suggests a continuation of this downtrend, with prices predicted to fall below $3.53 in the coming week. Therefore, a short position is recommended. Enter a short position at the market price around $3.58. Set a stop-loss order at $3.64, above the recent resistance level, to limit potential losses. Aim for a target price of $3.32, which is a significant support level identified in the historical data. This strategy leverages the downtrend and the RSI indicator, which is currently hovering around the oversold level, suggesting potential for further downward movement. Based on the provided data, Solana name service appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the forecast data suggesting further downward movement in the coming week. The RSI indicator is hovering around the neutral level, indicating a lack of strong momentum in either direction. However, the Bollinger Bands are tightening, suggesting that a potential breakout is possible. A conservative strategy could involve a short position with an entry price around $0.118, a stop-loss at $0.122, and a target price of $0.105. This strategy takes advantage of the downtrend and the potential for a further decline. The stop-loss price is set slightly above the current price to minimize the risk of false signals. The target price is based on the forecast data and the historical price action. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical price data shows a consistent decline, supported by the forecast data which predicts further decreases. The RSI, although showing some fluctuations, remains below the overbought level, indicating that the downtrend might continue. A potential entry point could be around $0.198, the low point reached on March 13. A stop-loss order should be placed at $0.195 to limit potential losses. The target price could be set at $0.179, the predicted low for March 14. This strategy utilizes the downtrend and the RSI to identify a potential entry point and sets clear risk management parameters. Based on the provided historical and forecast data, PEPE appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with support holding around $0.0000680. The forecast data suggests this downtrend may continue, with prices predicted to fall further in the coming week. Considering these factors, a short position is recommended. A good entry point for this short position would be around $70.06, with a stop-loss order placed at $0.0000710 to limit potential losses. The target price for this trade could be set at $0.0000650, aiming to capture a significant portion of the expected price decline. This strategy combines the analysis of the overall trend, support levels, and price forecasts to maximize potential returns while managing risk. Based on the provided historical and forecast data for SHIB, a potential investment strategy emerges. The price action shows a downward trend, with the forecast indicating further decline. The support price of $0.0000129 provides a potential entry point, allowing for a risk-managed approach. A stop-loss order should be placed at $0.0000128 to limit potential losses. The target price could be set at $0.0000120, aiming to capture a portion of the anticipated downward movement. Integrating RSI and Bollinger Bands further refines the strategy. The RSI is currently hovering around $38, indicating a slightly oversold condition. As the price continues to fall, a potential buy signal could arise if the RSI dips below $30. Simultaneously, the price action approaching the lower Bollinger Band suggests a possible bounce. Therefore, a combination of RSI and Bollinger Band signals, alongside the established support level and trend analysis, can provide a robust framework for executing this SHIB new investment strategy. Based on the provided historical and forecast data, DOG-COIN appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests further downward movement in the coming week. Considering this trend, a short position could be considered. A potential entry price would be around 58 cents, with a stop-loss order placed at 61 cents to limit potential losses. The target price could be set at 48 cents, aiming to capitalize on the predicted price decline. Additionally, we can incorporate the RSI and Bollinger Bands indicators. The RSI is currently hovering around $39, indicating that the asset is not oversold. However, if it falls below $20, it would signal an oversold condition and potentially strengthen the case for a short position. The Bollinger Bands show that the price is currently trading close to the lower band, suggesting potential for further downward movement. Therefore, a combination of the trend analysis, RSI, and Bollinger Bands indicator supports a short position with a specified entry, stop-loss, and target prices. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical prices show a consistent decline, and the forecast prices suggest this trend will continue. The RSI indicates the asset is not oversold, currently hovering around $40. However, the price is approaching the lower Bollinger Band, suggesting a potential for a bounce. Therefore, a strategy could involve a long position with an entry price around $0.00255, slightly above the predicted low on March 8. The stop-loss could be set at $0.00245, below the recent lows, to limit potential losses. The target price could be set at $0.00295, aiming for a retracement to the middle Bollinger Band. This strategy utilizes the potential for a bounce off the lower Bollinger Band while mitigating risk with a tight stop-loss. Based on the provided data, Near Protocol appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, with support at $2.82. The forecast data suggests this downtrend may continue, with prices predicted to remain below $3 for the next week. Considering these factors, a short position could be profitable. A potential entry price would be around $2.95, with a stop-loss order placed at $3.01 to limit potential losses. The target price would be $2.77, based on the forecast data and the overall downtrend. This strategy leverages the potential for further price decline while managing risk through a tight stop-loss order. Based on the provided data, Internet Computer appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data further suggesting a continuation of this trend. The RSI, hovering below $50, indicates bearish sentiment, and the price consistently trading below the $20 day moving average reinforces this bearish outlook. Therefore, a short position is recommended. Enter a short position at the market price, with a stop-loss order placed at $6.35, the recent resistance level, to limit potential losses. The initial target price is set at $5.92, the lowest forecast price for the upcoming week. This strategy leverages the downtrend and bearish momentum observed in the data. Based on the provided data, Injective appears to be in a downtrend. The historical price data shows a consistent decline, with support levels around $11.10 and resistance around $13. The forecast data predicts further price decline, suggesting a continuation of the downtrend. Therefore, a bearish position strategy is recommended. Enter a short position at $11.90, the highest forecast price. Set a stop-loss order at $12.10, slightly above the entry price to limit potential losses. Set a target price at $10.60, the lowest forecast price, aiming for a potential profit of $1.30. This strategy combines the bearish trend analysis, RSI oversold levels, and Bollinger Band squeeze, increasing the probability of successful execution. Based on the provided data, BTC appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The support and resistance levels also indicate a bearish sentiment, with the price consistently trading below the resistance level of $298. A suitable strategy would be to initiate a short position when the price reaches $304, the first forecast price. The stop-loss order should be placed at $291, the next forecast price, to limit potential losses. The target price could be set at $268, the lowest forecast price, aiming for a potential profit of $36. This strategy combines the bearish trend, support and resistance levels, and the forecast data to maximize the probability of success. Based on the provided historical and forecast data for THETA network, a potential position strategy can be implemented. The price has shown a downward trend over the past 2 weeks, with the forecast suggesting a continuation of this trend in the coming week. The support level at $1.03 appears to be holding, providing a potential entry point for a long position. A stop-loss order could be placed below this support level, at $1.02, to limit potential losses. The target price could be set at $1.10, aiming for a profit of approximately 8%. Additionally, the RSI indicator suggests that the asset is oversold, with values consistently below $40. This further supports the potential for a bullish reversal. The Bollinger Bands indicate a narrowing range, suggesting a potential breakout in either direction. However, given the prevailing downtrend and oversold RSI, a long position with the entry price at $1.03, stop-loss at $1.02, and target price at $1.10 appears to be the most promising strategy. Based on the provided data, WorldCoin appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast data suggests this trend will continue. Support and resistance levels are not available, making it difficult to pinpoint precise entry and exit points. However, the RSI indicator shows the asset is oversold, suggesting a potential for a short-term rebound. Therefore, a short-term bullish strategy could be considered. We could enter a long position at $0.948, the opening price of the forecast period. A stop-loss order should be placed at $0.916, the lowest forecast price, to limit potential losses. The target price could be set at $1.06, the highest closing price observed in the past 2 weeks. This strategy aims to capitalize on a potential short-term bounce while mitigating risk. Based on the provided historical and forecast data for Hooked Protocol, a potential investment strategy can be formulated. The price has shown a downward trend over the past 2 weeks, with the forecast indicating a continuation of this trend in the coming week. Considering the RSI, which is currently below $50, indicating a bearish sentiment, and the Bollinger Bands, which are contracting, suggesting a potential for a further price decline, a short position could be considered. A suitable entry price for a short position would be around $0.175, with a stop-loss placed at $0.185 to limit potential losses. The target price for this trade could be set at 15 cents, based on the forecast data. This strategy capitalizes on the perceived bearish momentum and aims to profit from a further decline in the price of Hooked Protocol. Based on the provided data, Artificial Superintelligence Alliance appears to be in a downtrend. The historical prices show a consistent decline, and the forecast prices suggest this trend might continue. The support and resistance levels further indicate a bearish bias, with the price consistently trading below the resistance level of $0.628. Considering these factors, a bearish strategy is recommended. A potential entry point could be around $0.596, the first forecast price. A stop-loss order should be placed at $0.621, slightly above the recent resistance level and the next forecast price. The target price could be set at $0.553, the bottom of the Bollinger Bands in the forecast period, which represents a significant downside potential. This strategy utilizes the downtrend, support and resistance levels, and the Bollinger Bands to identify a potential entry and exit point for the trade. Remember that this is just a suggestion, and further research and analysis are always recommended before making any investment decisions. Based on the provided data, Polkadot appears to be in a sideways trend with a slight downward bias. The historical price action shows consolidation around the support level of $4.34, with occasional breakouts above the resistance level of $4.49. The forecast prices suggest a continuation of this sideways movement with a potential for further decline. Given this analysis, a cautious approach is recommended. A buy signal could be generated if the price breaks above the resistance level of $4.49, with an entry price set at $4.50. A stop-loss order should be placed at $4.35 to protect against a downside reversal. The initial target price could be set at $4.75, with further targets based on subsequent price action. Alternatively, if the price continues to decline and breaks below the support level of $4.34, a sell signal could be generated with an entry price at $4.33, a stop loss at $4.38, and a target price at $4.20. Remember to always manage your risk and adjust your strategy based on market conditions. Based on the historical and forecast data, Filecoin appears to be in a sideways trend with a slight bearish bias. The price has been fluctuating between the support level of $3.01 and the resistance level of $3.23. The forecast data suggests a potential decline in the coming week. Considering these factors, a short position could be considered. Enter a short position at the market price around $3.08. Set a stop-loss order at $3.14 to limit potential losses. The target price for this trade could be set at $2.94, which represents a significant downside move based on the forecast data and the recent price action. Remember to adjust your position size and risk management accordingly based on your overall portfolio and risk tolerance. Based on the provided data, Conflux appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The RSI indicates that the asset is not oversold, but it's hovering near the neutral level. The Bollinger Bands show a narrowing trend, which could indicate a potential breakout in either direction. Considering these factors, a conservative strategy would be to enter a short position when the price breaks below the support level of $0.0986. The stop-loss should be placed above the recent high at $0.102, and the target price could be set at the next support level, which is around $0.094. This strategy leverages the downtrend while managing risk with a tight stop-loss. Remember that this is just a suggestion, and thorough research and risk assessment are crucial before making any investment decisions. Based on the provided data, Ethereum name service appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, with support at $17.30 and resistance at $23.90. The forecast data suggests this downtrend is likely to continue for the next week. Given this, a short position is recommended. Enter a short position at $20.50, with a stop-loss at $21.10 and a target price of $18.60. The RSI indicator is currently at $35.20, suggesting the asset is not oversold. However, the price action and forecast data suggest further downside potential. The Bollinger Bands show the price is trading below the middle band, indicating a bearish trend. The lower band is currently at $18.30, providing a potential target for the short position. Based on the provided data, Avalanche appears to be in a downtrend. The historical prices show a consistent decline, and the forecast prices suggest this trend will continue. The support price of $20 acts as a potential floor, while the resistance price of $21.90 presents a significant hurdle for upward movement. A suitable strategy would be to enter a short position when the price touches the resistance level of $21.90. The stop-loss order should be placed at $22.50 to limit potential losses. The target price could be set at $19, aiming to capitalize on the anticipated downtrend. This strategy leverages the downtrend, support and resistance levels, and a stop-loss to manage risk. Based on the provided historical and forecast data for Bitcoin, a potential investment strategy could be implemented. The analysis suggests a slightly bearish trend in the near future, with the forecast prices generally decreasing. A buy order could be placed around the support level of $0.0268, which has held strong in recent days. A stop-loss order should be set at $0.0265 to limit potential losses. The target price could be set at $0.0295, representing a potential upside of approximately 10%. Furthermore, the RSI indicator shows that Bitcoin is currently in a neutral range, suggesting that there is potential for both upside and downside movement. The Bollinger Bands indicate that the price is currently trading near the lower band, which could signal an oversold condition and potential for a rebound. However, the narrowing of the band suggests a potential decrease in volatility. Overall, this strategy combines the support level, potential RSI bounce, and Bollinger Band signal to create a balanced approach with defined risk and reward parameters. Based on the provided historical and forecast data for PENDLE, a potential investment strategy emerges. The price shows a downtrend over the past 2 weeks, with the forecast suggesting further decline. The support price of $2.20 acts as a potential floor, while the resistance at $2.62 presents a hurdle for upward movement. Given these factors, a short position could be considered. A potential entry point would be around $2.52, based on the upcoming forecast and the current price action. The stop-loss order should be placed above the recent high of $2.62 to limit potential losses. The target price could be set at $2.20, aligning with the identified support level. Based on the provided data, the trend for the sandbox appears to be slightly bearish. The historical price data shows a downward movement, with the forecast data suggesting a further decline. The RSI oscillates around the neutral level, indicating a lack of strong momentum in either direction. The Bollinger Bands are contracting, suggesting a potential for a breakout in either direction. A suitable strategy could be to initiate a short position at the entry price of $0.307. This price level acts as a resistance level and coincides with a potential breakout point based on the contracting Bollinger Bands. The stop-loss price should be set at $0.318 to limit potential losses if the price reverses. The target price could be set at $0.283, which aligns with the forecast data and the support level identified in the historical data. This strategy combines technical analysis with price prediction, aiming to capitalize on the potential downward movement of the sandbox. Based on the provided data, Decentraland appears to be in a downtrend. The historical price data shows a consistent decline, with the price closing below the previous day's close for most of the period. The forecast data also suggests a continuation of this downtrend. Support and resistance levels indicate a possible bounce around the $0.285 support level, but the overall trend is bearish. Considering the RSI, the indicator is currently hovering around $40, suggesting that the asset is not significantly oversold. However, the price action is nearing the lower Bollinger Band, indicating a potential for a bounce. Therefore, a short position could be considered, entering at $0.291 with a stop-loss at $0.296 and a target price of $0.270. This strategy combines the bearish outlook with the potential for a short-term bounce within the Bollinger Bands. Remember that this is just a suggestion based on the limited data provided, and further research and analysis are always recommended before making any investment decisions. Based on the provided data, ENG coin appears to be in a downtrend. The historical price data shows a consistent decline, supported by the forecast data predicting further price drops. The RSI, hovering below $50, indicates bearish sentiment. We will implement a short position strategy. We will enter a short position at the market price on March 8, 2025, when the price reaches $0.103. Our stop loss will be placed at $0.0982, the lowest price point in the past 2 weeks, to limit potential losses. Our target price will be $0.0942, the lowest predicted price in the forecast period. This strategy capitalizes on the anticipated downtrend and aims for a profit of approximately $0.009 per unit. Based on the provided data, Uniswap appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further price drops. The RSI indicator, currently hovering around $30, suggests the asset is oversold, potentially indicating a short-term bounce. However, the overall trend and the forecast suggest a bearish outlook. Therefore, a short position is recommended. Enter a short position at the market price, with a stop-loss order placed at $7.53, slightly above the recent resistance level. This stop-loss protects against a potential short-term reversal. The target price for this trade is $6.57, which aligns with the lowest predicted price in the forecast data. This strategy utilizes the oversold condition and the bearish trend to potentially capture a significant price decline. Based on the provided data, Chainlink appears to be in a downtrend. The price has been consistently decreasing over the past 2 weeks, with a significant drop observed in the last few days. The support price of $15.40 holds strong, suggesting potential for a bounce. However, the forecast data indicates further price decline in the upcoming week, supporting the bearish outlook. Therefore, a short position is recommended with an entry price at $15.70. The stop loss should be set at $16 to limit potential losses. The target price is set at $14.80, aligning with the support level and the forecast decline. This strategy combines the downtrend observation with the potential for a bounce off the support level and the forecast data. Based on the provided data, Aave appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price breaking below the support level of $200. The forecast data suggests this downtrend may continue for the next week. Therefore, a bearish strategy is recommended. We will enter a short position at the market price when the price breaks below the support level of $191. The stop-loss order will be placed at $196, aiming to limit potential losses. The target price for this trade is set at $185, which represents a significant downside move based on the historical price action and the forecast data. To further enhance the strategy, we will incorporate the RSI and Bollinger Bands indicators. A bearish signal is generated when the RSI dips below $30, indicating oversold conditions. Additionally, a price move below the lower Bollinger Band suggests a strong downward momentum. Combining these signals with the fundamental downtrend analysis, we increase the probability of a successful trade. This comprehensive approach allows us to capitalize on the bearish trend while managing risk effectively. Based on the provided data, EOS appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price closing lower on most days. The forecast data also suggests a continued downward movement for the next week. The support price at $0.535 acts as a potential floor for the price, while the resistance price at $0.556 hinders upward momentum. Considering these factors, a short position could be considered. A suitable entry price for a short position would be around $0.545, near the recent highs. A stop-loss order should be placed above the recent resistance level at $0.556 to limit potential losses. The target price could be set at $0.522 based on the forecast data and the support level. This strategy utilizes the identified trend and support/resistance levels to capitalize on the potential for further price decline. Based on the provided historical and forecast data, Tron appears to be in a sideways trend with a slight bullish bias. The support level at $0.238 has held consistently, while the resistance at $0.253 has capped upward momentum. A potential long position could be initiated if Tron breaks above the resistance level of $0.253. An entry price of $0.253 with a stop-loss order placed at $0.238, aiming for a target price of 26 cents. This strategy leverages the potential for a bullish breakout and utilizes a risk-reward ratio that favors potential gains. Based on the provided data, Suncoin appears to be in a downtrend. The historical price action shows a consistent decline over the past 2 weeks, with the price closing below the previous day's close on multiple occasions. The forecast data also suggests continued downward movement in the coming week. Considering these factors, a bearish strategy is recommended. A good entry point would be around the support level of $0.0172, which has held strong in recent days. A stop-loss order should be placed above the recent high of $0.018, limiting potential losses. The initial target price could be set at the next significant support level, around $0.0165. Furthermore, the RSI indicator suggests that the asset is currently oversold, with a reading below $30. This could indicate a potential bounce back in price, but the overall downtrend still needs to be considered. The Bollinger Bands show that the price is currently trading near the lower band, suggesting a potential for further downward movement. However, a break above the upper band could signal a reversal of the trend. Ultimately, the most efficient strategy would be to combine the bearish trend analysis with the oversold RSI condition, entering a short position around $0.0172 with a stop-loss at $0.018 and a target of $0.0165. This approach aims to capitalize on the potential for a short-term bounce while maintaining a long-term bearish outlook.